Well, Jeff, more good news today. Tesla recovered by $4.69 in the regular trading, and then another dollar in the after hours, handily overperforming the rest of the markets. Some are saying, though, that Tesla is still oversold. What do you think?
I mean, technically, it looks like it's still oversold, but it's also technically, it's below most moving averages. So I always kind of look at, to me, I spend 80% of the time, 85% of the time on the fundamentals and the rest on kind of looking at technicals as an overlay once I understand the fundamentals. And there's a lot of, it's hard to know. I always say this, it's hard to know why the stock moves one day over the next. Um, there's external factors, internal factors. So it's really difficult to say, but it was nice to see some relative strength in the stock relative to how the indices were moving. That's been a new thing of late for Tesla to have any relative strength. So that was nice to see.
Yeah, it's kind of been ongoing now for a couple of weeks anyway. We've seen some generally speaking, a little bit more up, not down as much and more up, which is a good thing.
Yeah.
All
Yep.
right. Well, there was a lot of crazy reporting today, Jeff. People were like going crazy that Elon had been buying shares of Tesla and that he now had 20% somehow. Miraculously, he was able to buy billions of dollars worth of shares. But even the mainstream media was covering it that way. A lot of people on X were blowing up. Would you like to set the folks straight on what actually happened today?
Yeah, I don't think he was buying in. I think this is a reporting thing. And quite frankly, it may have been generous. I mean, we legally this judge's ruling, I don't know if those options are actually taken away or they've really just been kind of suspended in a state of like, nobody can really do anything with that compensation package until both sides come back with a recommendation. So they may be there, but yeah, they're not exercised. He didn't convert them to shares. So yeah, I think this is as much ado about nothing. I mean, Elon is, through his innovative efforts, he is creating other aspects and other areas for liquidity, whether it be how great SpaceX is going and if there are any private events, exit events for that. And then, Starlink continues to do well. So I think, and then he's launched XAI. I think he's created a multitude of opportunities where if there was some transaction back with Tesla or just some transaction on his own, he could potentially create an event where he's got additional capital to work with.
Yeah, and to your point about whether he still has the legal asset in terms of those options, I guess there's a clear case. Clearly, they have now told the judge they are going to appeal, and now there's a several step process in that appeal process in Delaware. So that should put it back into, I think, his asset class again until the resolution takes place. That's not legal or accounting advice, but I think that's
Same
how
here.
it will be handled. Okay.
Yeah, same here. Same here. So we'll see. We'll see how it all plays. We'll see how it all plays out. But I guess the not so good news is 2 months to turn that in, I think, and maybe 6 months for the ruling. So you could be talking about a fairly decent overhang. And so I think what needs to be put into perspective is what does this mean in terms of his new compensation plan? Can his new compensation plan be developed, ready to go, even voted on with this hanging in the balance? Or, could the two sides come to terms where it's like, okay, once the legal stuff is out of the way and we think we've addressed it in the new plan, we've agreed on what we're going to do. We think this is going to work both legally, where we're incorporated and so forth. Hopefully that could be an earlier data point than waiting for 6 months for all this to play out.
Right. And I think they'll probably move it along as quickly as they can. And then it'll be up to, of course, the Supreme Court of Delaware to make a decision. And that could take 6 months, but maybe they'll see that there's an urgency, at least some urgency to do it sooner. But yeah, we can't count on that for sure. There was also late breaking news. I think it was clear. I don't want to be the one to send out a wrong headline, but it looked to me like they've also made a declaration with the state of Texas that their intent is to move to Texas.
Yeah. Yeah, if you've seen that, I've not seen that reporting yet. I've been back to back today, but if you've seen that, it's well in line with what they've stated they wanted to do.
Right. I checked in with Troy Teslike a little while ago because we've heard a bunch of, we've seen the price increases on the Model 3. We've seen the price decreases on the Model Y. I've heard rumors, maybe you've heard the rumors that Model Y production had popped up, and that maybe these Model 3 price increases and the dates being pushed back was even in spite of the fact that Model 3 production was good out of Fremont. Troy Teslike says no to all of that. He says no, the hardly any production of the Model 3 out of Fremont so far, and that the Model Y production in Austin is not up. Do you have anything from your sources or anything that you're seeing that would suggest which one of these rumor sets is correct?
No, what I what I tend to tell people is that um, first off, I do not have a car counting operation that I run, or I don't have that, and I do appreciate the work that people like Troy and others do. What I will tell you though is being someone who's been on the inside of these operations and have run and ramped product lines where I know there are people on the outside trying to count them. I will tell you that there are many things that you just don't know unless you're inside of the operation. For example, do they have a problem they're dealing with the Model 3 where bins aren't being assigned, but metal is being moved inside of that factory and they're being produced? We don't know that. They could be staged up to a certain point and they could be working on an issue. It could be a regulatory issue. It could be whatever. I don't think it's a regulatory issue because they've delivered cars,
Right.
but you never know. Something could have been found and they could be working on an issue. The other thing is it's a better product than the product it's replacing. And it's at a, still a very compelling price point. So it is invariably possible that more people are ordering this than Tesla anticipated, and hence that's pushing out some of the dates on some of the trims. And then on Model Y, I've heard they're reporting from Bradford. I mean, Tesla's installing more capacity. They're not doing that for their health. They're not doing this to as some sort of flex. They're doing this, what I've always said is you want to know what's going on inside of Tesla, you follow the capacity they're installing. And I had this conversation on another show earlier. It's like people think, they installed 2.35 million units of capacity. Well, that's what they said. Sometimes that could be a little bit higher. Sometimes it could be lower. They don't have to use all 235. In fact, when operations install CapEx, what they usually do is they usually run it on a schedule of around 80% utilization as the target. So people shouldn't be getting wound up if they're installing, 235, 24 maybe, and, at peak rate, and they run 2.1, 2.15, something like that. That's a really good thing. That's probably one of the highest utilized car factories in the world. We know Ford is running at 39%. We know GM is somewhere in the 50s. I think Stellantis was reported at 56%. This is per Autoline, which is a pretty reputable U.S. Operation. So for Tesla to be running their utilization maybe in the 80s, that's a great thing.
Gotcha.
But people don't understand this metric if they've not run a factory or an operation before. They don't understand it and they get kind of wrapped around the axle. So why did I bring this up? I don't think, again, Tesla installed and increased their capacity just because they felt like doing it. I believe that I believe they're building more cars than they did, in Q1, 2023. But we'll see.
Right.
Again, it's hard for us to know on the outside of what's happening. There are external things that we can kind of look at, VIN polls, maybe people know people, but it's really, I would say it's really difficult to do this stuff on the outside.
Gotcha. All right. I want to turn to a big subject. It is still, the markets, the economy, the Fed, and we Tesla investors are still under the thumb of inflation. And we're still under the thumb of the impact inflation is having on credit. And boy, that was sure proven yesterday. So we had this number come out that was completely off of what was anticipated, and the market at one point was down. The Dow was at one point down over 700 points on the day, only because of that report from the CPI. In the meantime, Trueflation came out, and I've been watching Trueflation almost the whole time this channel has been alive, almost 14 months now. I think you've mentioned that you kind of like Trueflation and you figured they're doing a good job. I know Larry Goldberg is a big fan. I know that the Fed president, the Fed, what is he? He's the chairman. I know the chairman has mentioned it in a call. So they've got some credibility out there, and yet there was such a big miss yesterday. And so this morning I made a call. I said to Trueflation on my show, on the After the Bell show this morning, I said, hey guys, you made this big call and then you missed it big. Don't you owe us an explanation? Shouldn't you put out something that explains what the heck took place? Well, guess what? They did. So I'd like to dive into that situation with you as to what they said and what they said in terms of why they missed and where they think that the CPI print was way off.
Yeah.
Okay. All right. So let's start with the first one. They say the small I'm sorry, let me start it up here. January's 2024 inflation release from the Bureau of Labor Statistics on Monday was a big surprise for markets. Instead of the expected drop below 2.9, inflation only came down to 3.1. This small decline was out of line with this typical seasonal trend, which tends to see a spending slump following December's exuberant consumption. It was also out of line with Trueflation's data, which showed downward movement in several categories and led us to predict a drop to 2.5 versus the 3.1 that came out. The markets were also surprised by this news because they had predicted 2.9 and it was at 3.1. Now that was down from the previous month of 3.4. So it was still downward, but as we've seen with stocks and everything else, if there's a miss, the market goes crazy. So they went crazy. So they've now compared their figures with the Bureau of Labor Statistics, and they came up with a number of discrepancies. And the biggest among these was food. Of all things, the biggest one was food, where the BLM, where the CPI came out at 0.6 month-over-month inflation in food. That's a 7.2% yearly run rate. And they said that we don't see how this could be an accurate representation of the situation on the ground. They said their data for transport and shelter also reflected a trend that isn't consistent with any of their data, which more than accounts, just those two would more than take into, that would be enough. Just the differences with what they had and the CPI had, just on those two, would be enough to make all the difference that between 3.1 and 2.5.
Yeah. Well, Trueflation, my understanding is that they look at things differently than the CPI. They have high frequency data. So, and that's where you have this leading and lagging indicators. Food is surprising, but food is also a very manual process and approach, my understanding, in terms of what the CPI does. So I can see the data itself inherently having a decent amount of variation and subject to scrutiny. The housing data, though, I think it's significantly, different, and it's very sticky. It's improving, but it's one of those things that's like the slowest thing to want to roll over, and it's such a big component of the CPI. But I think we should step back a bit. So Trueflation's different. It's higher frequency data is probably better data, but I view the CPI and the PPI as kind of like the AFC championship and the NFC championship leading up to the Super Bowl. We need both of these figures, right? Because PPI is a really leading indicator to CPI. PPI, I think, comes out tomorrow. And what the Super Bowl for the Fed is the PCE. The
Right.
Super Bowl for the Fed is not the CPI. So they look at, and its core PCE is ultimately what they look at. So
Right.
That's the Super Bowl. That's the one we really need to be looking at. CPI is an indicator. This number is a little hot. You shouldn't be dismissing it or just saying it's garbage. None of us should be, as my point, dismissing it, but I don't think it's the end of the world. I think the downtrend is still intact. It's not going to be straight down every month.
Right.
You're going to probably have some zigs and zags. But I think the PPI is we need to get to the other championship game and get the PPI, and then ultimately play the Super Bowl and see where the PC is, because that I think will dictate. March may be out of the question, but let's see what the PC comes in, and maybe that'll dictate what happens in March and May ultimately.
Yeah, I wanted to dig even a little deeper into this because their blog goes into some details, and I'm doing this mostly because I think it's really important. If somebody really is, if folks in my audience are really interested in understanding markets, understanding the economy, because it all comes together. That's what we try to do on this channel, right? And I know this is one of the things that you do as well. It's the fundamentals of the economy. It's the fundamentals of the stock that we're following. And then there are technical aspects of both the economy and the stock market and the stock. And all those things play out. You and I both believe it's more about the fundamentals of the economy and the fundamentals of the company. And right now, it's all about inflation and interest rates. So understanding this, maybe some of the folks don't want to get in the weeds, but I'd like to get just a little deeper on it. So they say that when it comes to food, the issue is that the BLS looks at the price of an item and compares it to the price of that same item a month later. It doesn't take into account seasonal promotions, discounts, consumer down trading to what do you call it, store brands instead of buying the regular brands, et cetera. They don't look at any of those things. Truflation, on the other hand, bases its index on millions of price points to track the impact of seasonal trends. And our data shows that the food category, in fact, saw prices decrease by almost 0.6 month over month, compared to theirs showing an increase of 0.6. So a 1.2% difference in the data. I mean, that's huge.
Yeah, that's a big call out. It's a big differential. And my guess is are we ever going to get to the bottom of it? Because they, like, for example, they restated, I believe they restated, this is January data. I think they restated December and they restated it lower.
Right.
Um,
And quite frankly, we've been seeing this over and over again with the government data over the last 6-9 months. The employment data has been all completely wrong. Every time they restate it, it's 35% difference than the actual print. And last month, the December went up over 100,000. That was crazy numbers. Well, let me just go on. Equally surprising is the fact that they had a significant increase in the price of lodgings away from home of 1.8% month over month. Our data showed a decline, again, over almost, so it must have been at least a 2% difference in the data. And again, that should be one of the more simple ones to actually figure out. I mean, I don't know how the Bureau of Labor, how the government statistics are arrived at, but I mean, you can call a few hotels. Okay, hotel chains. You should be able to get some pretty good idea of what the numbers really are.
Yeah. I think the Fed owes it to, the citizens of this country to, if they're going to set monetary policy as the central governing body, then I think it's incumbent upon them to show how they're going to improve their sources of data and how they make decisions, because the output of what they're doing is starting, too late and maybe keeping things on too long. And that could be a function of the quality of the data that they're looking at and the frequency of that data and so forth. So I think it's really incumbent upon them to set targets and figure out how to correlate better to the real economy.
Yeah. They, I think one of the other big ones that I've been watching carefully, I have quite a few of my clients are in the real estate space. I've even written a couple of books on real estate for my clients. None of them are out there under my name. They were written for the clients.
Yeah.
But in the rental thing, this is one of the ones that just, I mean, I understand their weird way of doing owner equivalent rents. They call people, they call you, Jeff, and they go, "Hey,
Yeah.
Jeff, How much do you think you could rent your house for? Literally, that's how they're coming up with the number.
Yeah, that's archaic. That's insane.
So archaic, but that's the owner equivalent rent. I understand that part of it. I understand that's weird and okay, I can, but when it comes to rentals, commercial, I mean, people, renting a home or renting an apartment or a home, that should be information that's readily available from Zillow and Redfin and all the rest. And yet, listen to this. Even when it comes to rental prices, they report a much higher amount than our data suggests. Based on a limited number of interviews, they do 6,000 interviews to reflect the entire country. Truflation's number, on the other hand, is based on millions of rental renewals and new rental agreements every single month across the entire nation. We've been seeing some supply constraints, which are putting upward pressure on prices right now. But in general, we've seen rental costs coming down as new construction of residential properties is completed, meaning multifamily. So between them, these categories make up nearly 50% of the US CPI index, and the discrepancies have a significant effect on overall inflation number and explain the reason why our January projection of 2.5 came in so different than what they did. So Jeff, your point a minute ago was they owe it to us to get it right. The CPI. The Fed, it would seem, even if the senators and the congressmen and maybe even the administration in general doesn't feel, isn't feeling it enough to make some kind of difference, you'd think the Fed would want to get it right. Wouldn't they be the ones to call it out and say, there's something wrong here?
Yeah, it's about having those KPIs and that want and that willingness, and then the expectation that you're going to continuously improve. And I think that has to come from, how the Fed is funded, quite honestly. And I think I think it's Congress, but whichever governing bodies ultimately, send the funding over to the Fed, I think they need to put objective measures on and stipulations on that funding. Like I'm not saying they've largely, they may have figured out a soft landing, them and, others in the economy, but, so that part of it's good, but the starting too late, I think October, November of 2021, they had 0 rate hikes planned for 2022. And I think in December of 21, they may have planned one like half point rate hike or something. And then we ended up doing 11, over the next, course of time, all in succession. So, yeah, they owe it to figure out like how to do the job better, how to have objective KPIs, key performance indicators of like, how's my driving? You look on the bumper sticker of these trucks, it's like call 1-800, whatever, how's my driving? But what are those objective measures of a good Fed? Like, how do we know that they're doing a good job? And you need that construct. This is how manufacturing works. You've been in manufacturing. You can't survive or run a factory if you don't have goals and if you don't have objective ways to measure performance. So why we leave our biggest institutions to not be measured and accountable is beyond me.
Yeah, so it's pretty crazy, and it has such an impact. So Larry Goldberg and I have been on the opposite side of one main issue pretty much ever since I started having Larry on my show. And all last year he said we were going to have a recession, and all last year I said we weren't. And now I'm about a 50-50 guy. I'm not sure how we can get into the third quarter above last year's big increase that we saw, 5%, 5.1%. I'm
Yeah.
not sure how we can beat that increase in the third
Yeah.
quarter. Larry's not worried. In fact, he said on my show on Monday night, he's 100% certain that we will be in a recession in the second quarter. Have you thought that through? Have you thought about where you are on whether we actually dip into technical recession?
Yeah, I have. I mean, we did in 2022. It's just whatever reason there
Right.
was, just ample control of the media to kind of tamp that down. But we had 2 successive quarters of negative GDP, and you're right, and Larry's right. The comps get really difficult on an annual basis when you start getting into Q3 because of that huge GDP print that we had last year. So yeah, I mean, second half is certainly possible. But I would say if you kind of put the glasses on and look back at January of 2023, I think everybody thought we weren't going to leave 2023 without a recession. And especially how we came into 23 with the markets at lows and, just was terrible feeling, and we did it. So the question is, what are those forces? We're coming into an election right now. It looks like we're comfortably low on unemployment, and so and it looks like inflation is still in a downtrend, but still, if you have 3% inflation, your prices are still going up. I think people need to understand. So I where I'm at on recession, if we have one, it's going to be pretty shallow and pretty quick. Your employment's too low, your output's too high, and you've got a lot of things working in the right direction, and you've got a consumer that's pretty resilient in dealing with these interest rates right now.
Yeah, well, Cisco just announced laying off 3,000. Paramount announced yesterday laying off 3% of their force. I checked out I'm going to forget the name of it again. It's that layoff website. I forget what it's called. Warn.
Warren notice, yeah.
Warren Notice. And Warren Notice showed that January we had 30,000 layoff notices. That is in keeping with the roughly 30,000 a month average for all of 2023. And the tech industry was pretty upset with the number of layoffs that were going. Nicholas was on Tuesday night, and of course he's in that industry, and he said, that's what a lot of people were talking about last year was all the layoffs. And while he said it seemed a little better to him right now, the January stats wouldn't suggest that it was that much better. Wouldn't take much. And oh, by the way, that 30,000 a month average, actually it was about 27,000 last year, 30,000 in January, that is a high point. The only time we've seen that ever was in 2020, I think it was. 2020, we had over that. It was a very big year for layoffs. But even in the 2008 crisis and et cetera, not these kind of numbers. So it wouldn't take too many months in a row before you start to suck up a lot of that overhang of too many jobs for not enough people.
Yeah, and that's where the surprises come in. Could we have a surprise there? Could we have a couple of banks failing in series? Those are the things we need to keep our eye out on. It's going to be, you want to cut rates because the economy is strong, but inflation is declining sequentially. And we may be in a position where the economy is strong, and spending is still, and we may not be able to just go in and cut because just things are just too strong. So I think that is a better alternative though than something breaks, a couple of banks fail, and all of a sudden we need to rush into a 100 basis point cut. I think that would raise a lot of eyebrows.
Yeah, unsettle the markets. Yeah. Yep. Let's see. What is this? See. Oh yeah. Yeah, I have to say this because it was so fun. I had to laugh out loud at myself for this statement. So I'm just going to say it again, even though it's maybe a little bit out of the right order here. The government reporting the last 6 months has been about as effective and correct as their approach to the border and their ability to control spending. So speaking of KPIs, we need some KPIs on the border.
Yeah. Tell me about it. Yeah, the trend is not our friend there.
No, definitely not. Well, Jeff, let's look at what's going on. We have got Tesla now up $1.57 in the after hours, sitting at 190.28. So I don't know that's not bad. So maybe okay, given where we were yesterday at the end of the day.
Yeah.
And then
definitely better position.
Yep. And let's go to the bonds then. We have the bonds at up 1.4%. I'm sorry, down. Good news, down 1.4 basis points right now at 4.253. I made the statement boldly last week that we would never go above 4.2, but I didn't. And that's another thing, just for fun also, Jeff, I was thinking, why did the market react so crazy to a single data point. Typically, even the market doesn't react that much for one data point. Do you think we were maybe a little overbought and they were looking for an excuse anyway?
Probably, but if you take the 2 days and smash them together, it was more bull market behavior when you smash the 2 days together than looking at them in isolation. So when you have that kind of recovery as we had, um, to me, it's more indicative of bull market versus bear market behavior.
We had a request from some of the in some of the comments that not everybody understands the inversion on bonds. Do you want to
Mm.
take a shot at it or me?
I'll let you do that.
Okay, all right. So typically, when you borrow some money from somebody for a very, very long time, you're going to ask them to pay more money, more interest, because you have much more risk further out. You don't know what's going to happen 10 years from now or 20 years from now with regard to that person, with regard to the economy, et cetera. So you want to charge more interest for that. If you're giving money only for the next year, it's like, well, that guy's got a pretty good chance he'll still have a job. So you charge less of an interest rate. Well, what we've been seeing for the last 20 months now is an inversion, the opposite taking place. And it's not by a little, it's by a lot. On the comparison between the 10-year and the 2-year, we've had sometimes as much as 50 basis points. Right now, it's running around 32, inverted, opposite of what is normal. Well, there's some folks that have done analysis on that, and they've come to the conclusion that every recession that we've had, there's always an inversion beforehand. It's not the opposite. Every time we have an inversion doesn't mean we get a recession, but when there's a recession, there has always been an inversion. And some people feel like when the inversion starts to re-invert the right way is when the recession starts. So for those of you who had no idea, for some people that are new, that's when we talk about this inversion, that's what we're talking about. And what's been happening this week and today is that the inversion's getting worse, not better.
Yeah, I think that's super helpful, Larry. I mean, Randy, for your viewers, to understand that perspective, because a lot of people hear this, but they don't understand what it means.
Right. And so in this particular day, right now, we've got the 10-year down 1.4, but the 2-year only down 0.4. So there's another full basis point of additional inversion just in the after hours or the pre-market tonight. And the 2-month is another one they compare it to, and it's even worse. That's up 2.2 basis points. So that's inverting over 3 basis points in just this after hours time. So it's very weird to have the inversion last this long, very weird to have it this wide. It's one of those things to, again, add to your list of things to look at in terms of where the market is headed. Let's take a look at another very unusual place. That's the fossil fuels, which people who follow Tesla are particularly interested in the fossil fuels. And we've got oil down 19 cents, sitting at 76.45, which it has been range bound within about $3 now for weeks. Very unusual for oil to be range bound in a very tight range for this long, especially when you've got all the stuff going on in the Middle East, the Red Sea, Ukraine, et cetera, and range bound at a low level.
Yeah, it makes you wonder. Obviously, production's up, but production comes in stages in terms of getting it out of the ground and then refining it. And there's a lot of geopolitical things going on too. Restrictions on our LNG shipments, and so I would say there's a lot of kind of weirder, nonlinear things happening versus kind of expecting the normal market forces to do the job. So hopefully that kind of cleans itself up pretty soon.
To be even crazier, you mentioned LNG, natural gas. It's just nuts. It has gone
Yeah.
down almost 60% in the last 90 days, I believe it is. And I looked at it. I promised this morning I would do a little further deeper analysis on this. And what I found out is we are now sitting at the lows of 30 years. And this is
Yeah.
not the lows of 30 years adjusted for inflation. This is nominal.
Right.
This is the price right now at $1.61. I think the low was 30 years ago at about $1.53. This nominal price.
Yeah.
So inflation adjusted, it would be maybe half that, like 80 cents or something. So this is really crazy. And
Yeah.
it's good for the economy. That's a fact. It's good for the tax. If your home is heated by natural gas, it's good for you because the natural gas heating right now in most places is way down compared to where it would normally be this time of winter. We have got the dollar slipping a little tiny bit, but it's not much. It's been up there pretty good for a while. Oh, okay. Then we got gold still sitting barely over 2,000, but down quite a bit. That does not usually comport with inflation being up.
Right.
It's kind
Right.
of the
A lot of
opposite.
weird indicators.
Yes. And then copper, which is Larry's favorite thing to watch, copper is still sitting at $3.70, which is in the middle of where it's been over the last decade or so. But again, inflation adjusted, it's really down. Of course, Bitcoin went nuts today. Did you notice?
Yeah, and I don't play in it directly, but I do look at some of the infrastructure behind it, the mining. So some of that has been interesting to me. So I am participating there.
52.2 today, 52,234 right now. So that's 2,800 up in a single day.
Yeah.
Is this where the money is going that's supposed to be going in the stock market and the bond market?
Well, I think there's a lot of money still coming into the market. I think there's a lot of money on the sideline still. And yeah, there's money coming into crypto for sure.
Yeah, for sure. All right, the pre-market, here we go. The Dow down 10. The S&P down $1.50 and the NASDAQ down 10. I would call that about as close to flat as you're going to see in the after hours or the pre-market as they, why do they call, do you have any idea why they call the stock trades the after hours and the index analysis the pre-market?
And no idea.
I have no idea either. It's just silly to me.
Yeah.
Any last thoughts about the markets, about Tesla, about the direction of things, Larry? Larry, I just called you Larry. You called me. What did you call me? You called me Larry too, didn't you?
Yeah, we're all Larrys.
We're all Larrys
I
today.
did just see breaking news that SpaceX has moved its state of incorporation to Texas from Delaware.
SpaceX
So
too.
that's pretty quick.
So SpaceX, Neuralink, and Tesla making the announcement that they're going to do it.
Well, SpaceX is done.
Oh, SpaceX is done.
Yeah.
So Tesla, for some reason, maybe it's a harder thing. They said the headline that I saw just said that they had notified Texas of their intent.
Probably public versus private company, but yeah.
Yeah, right. Probably. All right. Well, there you go. Breaking news right at the end of the show. Thank you so much, Jeff.
Thank you, Randy.
For helping us with Good News Wednesday every week. And we'll certainly look forward to seeing you a week from now.
You as well. Take care.
All right.
Thanks.
To all of you out there, it's been great talking to you.